Please join me in welcoming Greg Smith, CEO and co-founder of Thinkific. Greg, it's good to see you. Thanks for being here.
Thanks, Erica. It's a pleasure to be here.
Yeah. I guess to start off our conversation today, could you maybe just tell us a little bit about Thinkific and how it came to be?
Sure. So we make it really easy for anyone, entrepreneurs, businesses, to create their own learning products. We started with courses, but now people do a variety of learning products, from memberships and to communities around learning experiences, and sell and deliver those under their own brand, generally with a view to generating revenue. And so getting started, I was going to UBC many years ago and teaching and tutoring the LSAT, the law school admissions test. And I was doing it in person, trying to keep the student loan costs down, and wanted to reach more people. So we took it online and went looking for some kind of tech solution to make that easy to do. Looked at marketplaces, but then that meant we gave the content to them and under their brand. We looked at LMSs, but wasn't a really good fit for our needs. So eventually ended up mashing together a bunch of things to build our own solution. And it worked great for a while, but it was also a lot of moving parts and a lot of technology to keep holding together. And that kept growing, and I went on, finished law, practiced law for a while, actually at Blake's as well, BLG and then Blake's. And had a great time doing that and really enjoyed it. But the whole time the course was growing, and more importantly, lots of other creators and businesses and entrepreneurs were reaching out and saying, we want to do what you've done. We want to build our own learning experiences, take what we're good at and share it with the world, and do it with a view to generating revenue and put it under our brand and on our website. Can you help us do this? And that was the impetus behind starting Thinkific. And so we started putting this together, and in 2012 started building Thinkific to make it easy for any business or entrepreneur to create their own learning products and go and deliver them under their own brand.
That's awesome. I think the young folks call that a side hustle that became a main hustle.
Yeah, although there wasn't much, like when I actually started practicing law, there wasn't a lot of hustling on the side. It was more just running on autopilot, which is, I guess you could say it's still a side hustle now, in that AlphaScore, my online LSAT course, is still running to this day, but I haven't touched it in pretty much a decade.
Amazing. That's an amazing kind of history. And of course, then during the pandemic, the last couple of years, there was just, I'm sure, even more demand than ever before, with people moving to online learning and sharing their courses. So what was that like for your team and your company?
Yeah, certainly. In one sense, we got lucky in that our CTO and R&D team had kind of seen not the pandemic coming, but the possibility of massive influx of demand. And so they had already started about a year prior building out the infrastructure to support something like this. So we were well positioned when it happened, because when it happened, we got hit really hard with a lot of in a great way, a lot of increased demand, both from the learner and student perspective, and also our customers, the creators of the courses. So initially, it was sort of all hands on deck to meet the influx of demand, both from a, say, marketing, onboarding, customer support, and also R&D and server and infrastructure perspective. So all hands on deck for the first little while, first few months, and then kind of got back to being able to continue to grow the business and invest in the future for it. But initially, it was very much jumping to all hands on deck to support all the new people coming in.
Yeah, I can imagine. But also, I'm sure very fulfilling to be able to provide something to people during, like, have a positive impact during a really challenging time during the pandemic.
Certainly. Yeah. Our mission really is to help entrepreneurs create successful businesses and scale their businesses. And so it was a lot of those things were really fulfilling for us. You're right, in that we saw businesses that had gone under. My brick and mortar yoga studios shut down. I need to go online, or my other business is slowing down. How do I transition to online? So it was really encouraging for us to be able to help and actually see many entrepreneurs increase their revenues and increase their success, not just sort of save them from bankruptcy. But the other thing is just seeing the massive influx of new people starting brand new businesses over the last few years has been amazing. So it was really encouraging to be part and see some of the stories, many sort of tearful stories of success or saving people from bad situations.
Yeah, absolutely. And as you mentioned, it wasn't easy, I'm sure, as well. And I'm curious, like, were there some practical strategies in terms of how you managed that influx of customer demand? Were there kind of things you learned from that process that will serve you in the future?
Yeah, a few things. I think one was it's okay sometimes to, I'm kind of adverse to pivots generally. And I'm very much like the hedgehog or the single track mind, and just, we've got a plan, strategy, keep going unless something massive throws us off course, which I think generally is a good thing. But at times like that, it is important to kind of zoom out, take a new look at the environment and say, okay, do we have to do something differently? And in that case, we really did. So being open to it, zooming out, looking at the macro conditions and saying there's something different, I think, going on here. We need to act differently in this case. Another one was for us, financial, like the world was hurting, and in a lot of ways our team, and there was a lot of negative there with the pandemic, obviously, and we would have stopped it if we had any power over something like that. But there was also a huge financial boon to Thinkific and being able to grow and support people in doing it. But it was balancing that with being able to help in the places where we could. So there were lots of places where we helped. We don't generally serve schools, but we did free accounts for a bunch of schools that just needed it right away because we were able to. We launched a $1 million entrepreneurs fund where we were giving entrepreneurs who were struggling to transition the funding to actually transition online, which ended up working well for us in the long run. But in the short run, it was just really about saving a bunch of businesses and giving them quick access to small amount micro capital to help them make a transition. So that one was a big learning in that, one, it worked quite well. It was well received by the community and the entrepreneurs, but certainly was a lot of overhead and management on us to be essentially spinning up $1 million micro capital fund right away.
I'm kidding. And so, yeah, I'm curious if you have any kind of like lessons learned, like from that experience that you would pass along to other founders. Any kind of words of advice?
Yeah, I mean, over the whole journey, or specifically from 2020?
I'll say from 2020.
Yeah, I think I shared a few. One is just being, I think it's good to stay to your course and your strategy, but be willing to zoom out and take a different look at macro conditions and make some adjustments. Another big one that I think we did well, but could always do better, is, especially in a situation like that or any areas of big change, is watch the team and be conscious of culture and team. That's something we did really well, of taking care of the team throughout this whole thing and recognizing that it was going to be very different. People were facing a lot more stress and changes to work environments and even mental health conditions. So being conscious of that. I think something we could have done better, and I'm still trying to figure out how to do better even in today's environment, is we're still missing that a lot of human connection, and that people are starting to go back into in-person, but I'd love to figure out more ways of, I mean, there's a big difference between remote and COVID remote. So still trying to figure out even now how I think we would have and could have operated better over the last couple of years if people had more opportunities to get together in person. There's just some magic that happens. And even if you're a fully remote team, just doing that once a quarter or once a year with your team has game-changing effects. So that's still something I'm trying to figure out how we do more of and better at.
Yeah, I'm sure many people are.
Yeah. Aren't we all?
And yeah, I mean, across, I know you've celebrated many milestones across the full course of your process and growing. But of course, last year you won a TIA for Company of the Year, Scale Success. We were pleased to celebrate that with you. And another milestone last year was joining this unicorn club, which I'm sure was a bit of a unique and surreal experience. So I just wanted to kind of zoom in on that moment, and maybe you could tell us a bit about what that was like for you.
Yeah, haven't gotten our membership card or anything for that club yet, but yeah, that was a weird one for me personally, in that it was never something we sort of were measuring or targeting, or and personally, that kind of a milestone for me, I try to almost ignore and don't value significantly. But certainly and I mean, I guess technically with current stock markets and the way they're treating tech stocks, I don't think we are a unicorn these days. But But going through that experience, in particular, the IPO was interesting for me in that I tried to make it a non-event, as sort of, why would you celebrate this? Like, we've raised some money, we've IPO, great. We're here for the customers. The events we celebrate are for our customers. And there was kind of a learning for me there that it is important to take a step back and actually celebrate those events. We did with the team, but I think even personally as founders and entrepreneurs, it's a good thing to do that kind of a thing. I went through a weird period. My wife sent me an article a couple of weeks after the IPO of the happiness hangover. And so going through these major events that if you don't take time to kind of process it, it can actually be a negative. And so I think I went through a brief period of not being particularly happy after that. And then once I figured that out, it was sort of able to take a step back, appreciate the moment, and then charge back into things. So there's some interesting learnings there of, as founders, we're rarely in it for those kind of milestones or the money we're in it for the customers and the product we're building and the difference we make in the world. But it is good to appreciate some of these milestones as well along the way.
Yeah, absolutely. And so now I can't believe it's April 2022. A lot has changed in the world. Can you talk a bit about where you are today, and what's next for you and your team?
Yeah. So what we've seen is especially coming out the other side of the last couple of years is the market for us is massive and growing. And although it is interesting, what we're seeing is there was a lot of urgency during the pandemic, obviously, of people saying, my brick and mortar is shutting down, or I need to build an online course. I know that's what you do. Sign me up. Now we're seeing a bigger audience, bigger growth in the space for us, but a lower sense of urgency. So a more typical mass market where you have people saying, I've got a growing TikTok audience. How do I turn this into a business? Or I've got an existing business. How do I go more online and share what I've got? And that's a bit more of a nurturing customer journey to bring people through, which is interesting. So I think there's a return of many of the market forces that were driving our industry from prior to the pandemic coming back, many ways even more so, but a shift in some of the ways people are thinking about things. And in particular, our space, we're seeing a lot of interest from big platforms like YouTube's now got paid content. Instagram has paid content. So they're seeing the same opportunity we are. So that's very much something we're leaning into. We've also recently made some changes on the team, let go 100 people last week, actually. And so for us, that was something that you could say, it was the right decision. It wasn't something we absolutely needed to do. We've got a healthy cash balance, but I think we're a better company now for it, have a better P&L looking forward. And really, it allowed us to lean into our growth drivers and really optimize for growth. And sometimes I think when you go through hyper growth and you rapidly add to your team so quickly, especially if you're really good at hiring, you can develop a mentality of throwing heads at every problem. And it allowed us to recognize some real efficiencies and lean into our growth drivers. So it was a difficult thing for sure. And didn't enjoy doing it by any stretch, but I think we come out the other side a lot stronger.
Yeah, absolutely. That's so interesting. And I'm sure you've had some learnings going through that process.
Definitely. Yes. If anyone ever needs to and wants the playbook, let me know.
Yeah, definitely difficult. Appreciate you sharing with us. I guess maybe let's take our conversation a bit broader. I'm curious, where do you see some of the greatest opportunities, for growth in BC's tech sector as a whole? Maybe you can reflect on that from your experience.
Yeah, in terms of how we can grow the sector as a province, really?
Yeah, and I think, obviously, how do we grow the local economy? How do we keep jobs here?
Yeah.
What are your thoughts?
Yeah, the jobs one in particular is really interesting in that you really can, it was coming a few years ago, but you really can work from anywhere. And so one thing I think is important is once companies reach our stage or even before this point, they're fairly well rooted in where they're at. So I think the bigger investment as a province, what's important is helping companies in the early stages get founded and get up and running and get started and set down those roots. Because once they do that, then they're going to pull in the talent. Even if the talent is working remotely, they can pull in the talent. But it's those early stages and investing in the early stages and doing everything we can to help companies get started and get to growth, recognizing that that's where you have the biggest failure rates and lots of churn. But there is still friction to getting started there. And I think the more we do around even it being as simple as office space or places to go and get started, mentorship, a lot of the things that BC Tech is doing, I think is actually exactly what we need in terms of helping people get started. Spaces like Launch Academy was super helpful for us in the early days. So that kind of a thing helps. On the talent side, yeah, it's interesting. I think we're seeing costs rise considerably now. I'm hopeful that at some point there's a bit of an equilibrium in that right now it seems to be rising to the cost of the highest market and the highest paid company. I think over time that will come down and start to reach a bit of an equilibrium. But the other thing I think we can do to retain the talent is that we've done quite well definitely is culture, and just invest heavily in culture. And not every person looking for work is always about what's the single biggest dollar value I can put on my paycheck, as much as what do I get out of the mission, the vision of the company. So being a mission-led company, but also building a great culture is a key part of the talent acquisition and retention that certainly is working well for us.
Yeah, absolutely. I think that's really critical, is that alignment. And it becomes more of a matching than a hiring, right?
Yeah.
That's great. And I did want to do a call out to the audience. We are open to some questions. You guys are welcome to put those into the chat. I've got maybe one or two questions I'll pose, but then certainly happy to take some of those questions. So I'll keep an eye out there. You just mentioned kind of that support for early stage companies. And I know that you were part of BC Tech's hyper growth program a few years back. So I'm going to put you on the spot to share what your experience was like in that program, and why you think, the composition of that program was really important to your growth.
Yeah. So, I mean, being at that stage, I'll be honest, one of the first big attractants to the program was free office space for a few months. So, which was great. But then you come in for that kind of, and then we got so much more out of it. There was really good coaching. I think just being in a space where you're around peers who are growing as well, and that sort of organic water cooler, coffee table, kind of like sharing the successes and failures and learnings and stuff. So having peers in one space was really helpful. Definitely exposure to mentors. I probably undervalued it at the time, but some of the people I met there, from Jeff Booth to the guys at Rhino Ventures, became long-term either investors, board members, or involved in the company, or just helpful along the way. So a lot of help that way in terms of being exposed to mentors and investors as well. Mm-hmm. And then there was one funny story that, looking back, there was a press release that BC Tech helped put out that I think one of the other portfolio companies got their hands on and made some significant edits to. And at the time, I remember thinking it was sort of hilarious, but it tagged all of us in hypergrowth as the future billion-dollar anchor companies of the province. And I started getting, when it went out, I started getting inbound calls from offices of like ministers of employment in European countries saying, when are you going to open your Belgium office and things like that? And I mean, we were 10 people at the time, but hey, it turned out to be somewhat accurate of the future.
Yeah, well, there you go. I have a crystal ball over here, so
right. Yes.
Taking a look in there. Good. Well, I have a couple of questions here in the chat. So, question for Greg. Thinking about growth, is the Thinkific platform going multilingual so that you can open up your market to the global marketplace?
Yeah, so you can offer courses and if you're creating on Thinkific, you can deliver your programs and courses in different sell them in different currencies, and you can translate them in the platform into over 40 languages. And so we're constantly adding to that. So that can be done already. What we don't have right now is it's not translated from a marketing, customer support, and from a customer interface perspective to many languages. So that's something we will do in the future, but not this year.
Great. Another question in the chat. How did you find your CTO? Has she been with Thinkific since day one?
Yeah, and that's a great one. Actually, was just on with a a customer of ours who does Sydney Montgomery. She does consulting for people going into universities and mostly actually women of color and helping them get into programs like law school. And she's actually launched her own SaaS company off the back of the success with her online courses. And so she was just asking me the same question about finding a CTO. So I was chatting with my original CTO. So we actually have a new CTO that started with us last year. Our original CTO came in as one of our first software developers about a year into the company. And then after a couple of years, I just recognized he was amazing and acted like a CTO and a co-founder from day one. So we made him co-founder and CTO. So, but it's a tough question, I think, for new entrepreneurs and people starting out. And a few things I'd suggest is for people like me who can't write code, and most founders who are looking for a CTO, if you can't code, one of the most important things is having someone who you really trust and understands software development in particular, or at least your technology, who can evaluate your CTO's technological abilities so that you don't, because I've seen founders end up a year or two in with the CTO only to find out then that they're not actually that great at the technology that they're working with. So having a third party who can evaluate them is totally worth the investment. In terms of finding them, Matt, I think we found him through AngelList. But I think networks like BC Tech's a great way to, and as more networking events open up. Plus, I think there are actually CTO networks, and I think especially with the way the labor market is over the last couple of years, I think you'll find more and more people who are not currently a CTO, but they're getting more senior in their roles in tech that are looking for opportunities to maybe jump out and get involved in a startup. So I would be looking at potentially poaching from bigger companies as to, just one super talented person who's maybe not a CTO yet, but they're a bit more senior in their role.
Great. Got another question here. Thanks to the audience for keeping them coming. With the recent round of layoffs, what strategies did you put in place to protect your culture and particularly make sure people felt safe or felt like their job was safe so they stuck around?
Yeah. So one thing I said earlier just is like it was a very difficult thing that you don't want to do, but I think our team did it really well. So a few things we did was just a lot of thought and effort and energy into understanding and thinking through the impact on each type of person through it. So the people who are staying, what is their experience going to be through this, and how do we optimize that experience as much as possible? Similarly, so for those that are leaving. And so we did things like, if you read my letter, I did put a letter out. It's on the Thinkific site, made it public. That was a letter to the team, but it also walks through the exact sort of day of process and the things we did. So things like how we looked at severance and benefits and career placement, being transparent about it. And then some of the key things just about the experience was making sure that there was no waiting time from people finding out this was happening, or minimize the waiting time to minutes from finding out something's happening to am I affected or not. Right. You don't want people sitting in anxiety for even hours, but also making sure everyone got a one-on-one. So there's a bunch of stuff we did to manage around that I think has, and when you show empathy towards people who are leaving, certainly their friends who are staying, I think that has a real positive impact on the culture in the long run as well. Yeah,
absolutely. That's great. I have another question here. Where do you see Thinkific in a year from now?
Yeah, so we have a big, hairy, audacious goal of getting to 1 million successful course creators, or creators, no longer just course, because we have a lot of creators doing things like communities now. So continuing to lean into that and then grow even beyond that. But that's the current big picture goal of just helping as many entrepreneurs build and launch their own learning products and build a business around it. So everything we can do to support that. Investing a lot more in R&D and the things that we offer them is and so we can continue to grow and support more creators in the space.
Awesome. That's great. Another really good question here. What were the key metrics you were tracking pre-IPO, and did they change afterwards?
Yeah. So one thing we definitely went through a lot of thinking pre-IPO was even over probably although from committing to do an IPO to actually listing was 5 months for us, or deciding to do one to listing was 5 months. I'd say even the prior years before that, we worked a lot on getting metrics straight and making sure we were really clear on what was important. Nothing that was net new to us. We've been tracking most of these since really early stages. The nice thing, especially in software, is a lot of your metrics are just available with plug-in dashboards. We've gotten a bit more sophisticated than that now. But I would say if you're thinking and preparing for an IPO, a few of the things that are most important is really get your data straight and what your key metrics are. For us, it was things like understanding new customers, new customer acquisition, understanding churn and net revenue retention, understanding GMV, which for us is the total value of courses being sold, or a good representation of that value of courses being sold or products being sold through Thinkific. And a few other key metrics that are all, if you check our investor site, the key ones are always listed and updated there. But really understanding those and understanding what investors are going to care deeply about, and then creating a story, telling your story and telling it in a way that people can easily understand it, and making sure that the metrics and the story tie really closely together. And so you tell a story and then show a metric, tell a story, show a metric, makes it really easy to understand what you do, and it's backed up by data. The other approach that we took that I don't see a lot of people do just in generally in raising money is took the approach of start with facts and historical analysis and then move into the future. A lot of people open investor decks or IPO decks with, here's how much here's the hockey stick graph for the next 5 years. But I find that instantly throws people into a mindset of criticism and disbelief, as opposed to saying, here's what we've done over the last 5 years. And we really focused on the past and said, here's everything we've delivered, and then moved into, and now here's what's coming, now that we've got some belief and trust built up because everything we shared was factual up to that point.
That's great. That's really helpful. I'll encourage people to keep on putting some questions in the chat. We're hitting you with a lot today, Greg. This is
great. I'm used to it. We do this kind of stuff with the team all the time. And then when I hop on webinars, and so, yeah.
That's great. I'll ask you one quickly before we look back to the chat. It's one I asked just out of interest. I'm curious if there's like specific kind of like places you go for inspiration or to kind of guide your business strategy. Do you have like a favorite business book, or do you have a podcast you follow religiously? Just curious, because then I'm going to go buy it or go listen to it.
Yeah. I'm seeing, hold on, I'm going to go grab it.
Good. Pulling from the bookshelf on ScaleUp Roundtable.
Yeah. This is one I love. My son likes to take it to daycare because it has pictures of animals in it. So it's kind of a fun one to share. It is an illustrated guide to Michael Porter. Michael Porter's stuff is great, but it's really dense. But that gives a really nice sort of visual and summarized approach to strategy, which I love. Anything by Jim Collins is I find amazing. But then you have to take those strategy and call in sort of big picture stuff and really get into execution. And I'd say actually I've spent more time learning strategy and planning and things. And if I have a thing I could have done better over the last decade, it would be spending more time learning about execution. And it's something that I think naturally as a founder getting started, you're in the weeds on absolutely everything. I'm writing the copy for our landing page, answering our support tickets, not reviewing code because I'm not so good at that piece of it, but in the sprint planning meetings for building our technology. And then naturally, as you grow, you get a little more removed from it. And I'd say it's just, you can never step back too far from execution, and staying in the weeds without micromanaging is an important piece. So I've been more interested lately around digging into execution and looking for books on that. So there's one actually just called Execution that's been quite good.
That's great. Yeah. I appreciate you pulling from the bookshelf. And our guest last month was Christy Wyatt from Absolute, and she was saying she's an avid reader. She would, used to read one book a flight and then leave it on the flight for the flight attendants because she didn't want to carry the weight with her. But she had said, yeah, that was one of the things for her, is that you're a lifelong learner because no one's followed the path you're on right now. And you just need to continue to try and learn from others and then apply it in your business setting, right? So that's great. I've got a couple questions coming in here from the chat. Julia was asking, did you have any specific mentors who helped you on your journey?
Oh, I mean, so many. And there's ones that are external and ones that are, more senior. And then there's even mentors within, in that, like, some of the people on my team who maybe even report into me and me seeking advice on things that I see that they're great at. I think there's something you can learn from almost anyone. So looking at what they're really good at and looking for that opportunity, I think sometimes we have egos that prevent us from seeking advice from someone who's not as far along as us, but often there are things that they're better at. So I do try and look at it from that approach. But some great mentors to me, even that came out of hypergrowth. So I mentioned Jeff Booth, and then Fraser Hall and Jay at Rhino have been super impactful on growing it. All of my current board members are all operators, so a lot of mentorship there as well.
That's awesome.
Mm-hmm.
Connie is asking, what's your approach to R&D?
Approach to R&D. Let's see. Look for an ROI. Always, my early approach is a bit different now, but I'm trying to get back to more of that is digging in and understanding how long things are going to take and what the expected return is. And it's never a perfect science, but I think constantly running that math of you're always going to have 1,000 options and only the ability and resources to execute on a few of them. And so constantly questioning the ROI of where you're making your R&D investments is, I think, critical, and trying to optimize that ROI. So how do we get more out of it and put less into it to achieve it so that we can do more with it is really the big one. And then within that, I think it's the age-old sort of advice of find amazing people. The better people you have in that team, especially, the more you're going to get out of it.
That's great. Another question we have here. What are the main reasons, in your opinion, for the 7 times shares decline during the last year, and how do you deal with that?
Yeah, sure. So we IPO'd at $13, and I think we're trading at about $3 today. So that's a pretty big drop for sure in share price. And what I've done is, I can't say we're blameless in that by any stretch, but if you map our share price to most other tech companies on the TSX, it's pretty much an identical chart over the last 9 months. So a lot of it, unfortunately, is just tech on the market. So that would, to me, be the obvious biggest one, and that almost on a day-by-day, play-by-play, you can see the charts move almost in sync. And that's one of the interesting learnings of going public. I mean, I had taken companies public as a securities lawyer before, just a couple of them, but seeing it definitely from the issuer side is a bit of a different journey. I'm hopeful we can give a much better return for shareholders looking forward into the future. And we're probably, in my opinion, is that we're undervalued, given that we're trading near cash in the bank value. But we'll see how the markets treat us in the future for sure. And I think the biggest thing, and what we talk about with the team, is we can't control the daily movements of the market and the macro impact on tech, but what we can do is execute and deliver on results. I mean, we've meet or beat every projection we've put out there so far. So we're going to continue to do that is the plan. And as long as we do that, I think long-term we'll see good returns.
Yeah, focus on what's in your control, right? Yeah,
exactly.
Great. Flo is asking, how important was GMV, a key metric when valuing the business, when raising money, and for IPO?
Yeah, it's probably it's an important metric, but less so. It's the one that's most volatile and least controllable, because it's something about how our customers sell and how they choose to sell. And it doesn't even capture all of what our customers sell. So it was important in showing that our customers are being successful, but it's only one measure of how they get success. So there's a lot more to it within that you can pull from our investor site that we talk about. But for example, they can sell off platform and then bring their enrollments onto Thinkific and still get lots of value from us. So I think it was important because it represents the success of the customers. It also represents the future opportunity for our payments business, and that we can take a percentage of that on a payments basis. But it's an imperfect metric at best.
Thank you. Michelle, I'm going to skip yours because it's going to come at the end of the session around advice. I'm going to move to Gavin's question. Gavin's asking, if starting Thinkific today, how would you approach office-based strategy? For example, would you try to stay entirely remote? Would you wait until a certain size?
Yeah, I think office is such an interesting one for companies, especially companies that are growing quickly. I don't know that our current way of signing 5-year leases works all that well, that companies that say double the team every year. If I was starting today, I think I would still I love remote and having that ability. And you can see I'm here in my home office, but tomorrow I'll be in the Vancouver office. So I'm trying to mix it up. I think I would still have some element of probably some element of both, in that I I think there's something irreplaceable about getting together in person. You could just do it monthly or quarterly or annually with the team, but I think especially when if you said I was starting tomorrow, I would be getting a team together in person, because I think those over the shoulder, overheard conversations are kind of irreplaceable. There are ways to duplicate that online. And the nice thing about obviously going online is you can hire talent from anywhere. But if it were me, I'd still be doing it in person, starting it today.
Awesome. That's great. And the weather's, we're hitting spring and summer, so there's always outdoor meetings, patios and such. So
Yep.
That's great. Another question here. What made you decide to go public instead of getting acquired? Do you have a strategy to grow by acquisition?
Yeah, so I'll take those separately. We went public largely because it was, a few reasons. One, we're facing an absolutely massive market opportunity. We're all still very excited about that. And so going public was the best platform for us to take advantage of it, both to raise capital, but also there's a branding event there and getting additional public exposure. It also gives liquidity for shareholders, in particular for all of our employees, which are shareholders. So giving them some liquidity also gives us the ability to attract talent, both from the sort of bigger name recognition of being public, but also having liquid stock options is helpful. So a whole bunch of reasons that I found that are good. There's certainly overhead and cost to doing it, from high cost of insurance to just the amount of time I spend talking to investors or working on earnings calls. But I think overall it's worth it for the platform it builds for you, for both employees and customers and brand building. And instead of getting acquired, really just not, we did at some point, early days, sort of consider acquisition pre-IPO, and was interested in that. And obviously there's tempting elements as a founder individually. It would have been, life-changing, multi-generational life-changing for me. But the easy answer is, the more we thought about it and looked at it, I was sad by the idea of that we would give this up or walk away or let someone else finish it instead of us doing it. And we absolutely, I love stories we hear from our customers, the difference we make in our lives, and going public let us do so much more of that, rather than getting acquired and essentially potentially seeing it be either done by someone else or just put aside somewhere. So, and then in terms of, do we have an M&A strategy to grow by acquisition? No, I don't want to go acquire a bunch. There's roll-ups and where you acquire a bunch of competitors. We don't want to do that. We've been approached by some to do it, but I don't think it works all that well for us to do that. We have looked at M&A for, say, buying products, other SaaS products that can be complementary to what we do. But currently, especially on the private company side, valuations are a little out of whack. So we're exploring it, and we may do some of it, but nothing imminent.
Great. Well, maybe I'll come to kind of my closing question for you, which Michelle also posed, which is just kind of, do you have any words of advice for entrepreneurs or companies who are starting out but have kind of those big ambitions? So kind of some final words of wisdom that you can impart.
Yeah, I'll rattle off a few. I think persistence is key, because you're going to run into challenges. I think having a market that you're excited about, even if the current idea doesn't work, and a customer base and a way of helping them, or overall a market and a mission that you're super excited about, because you may change how you approach that, but being excited about that is really important. Having a growth mindset, just that ability to take criticism and feedback and failure and see it as an opportunity to learn, not a setback. Being curious and just always be learning, because as you pointed out, Erica, it's a journey of constantly learning and growing. So taking that approach of your role is going to be different every quarter, it's going to evolve and change. Mm-hmm. And then another big one that's worked well for us is just be kind, empathetic, and care about all the people around you, be it your team, your customers. It's something that over time I think really builds up a lot of personal capital amongst that works well, and it just makes the whole experience a lot more fun.
Well, that's awesome. And certainly it's a pleasure learning more about your journey and hearing from you today. I'm excited to see what's next, and we'll all be watching closely. So I think we'll wrap there. I've got a few things to say at the closing, but Greg, I just wanted to really say thank you It was a pleasure to get to know you today. And I'm sure the people on the call, I know we've got a lot of our startups and growth members who has signed up and we're really interested to learn from you. So really appreciate you sharing your time.
Thanks. Appreciate it.